The markets are at a pivotal moment with inflation easing and opportunities emerging. The world's largest asset manager is taking notice. Rick Rieder, BlackRock's global fixed income CIO, says, I think there's some great stocks, a bunch of which have been repriced down. I just think you got to manage your near-term beta a little bit and then think about what are the stocks I'm going to hold for a longer period of time. Technology is a great place to invest in equities, but you need to think about who are the companies that utilize data effectively that are maybe broader than the mega cap names. And according to Rieder, we're entering a historic point in time for investors where bonds are back in favor. But tech stocks, especially those using data effectively, remain an essential part of the long game. Rieder also paints a nuanced picture of the current macro environment. Inflation is easing, interest rates remain elevated, and investors can now build relatively low-risk fixed income portfolios, yielding 6 to 7%. That's a dream for pension funds and long-term investors seeking stable returns. But that doesn't mean equities are dead, not even close. While many firms are reducing equity exposure, Rieder is urging investors not to get spooked. He sees this as a moment of transition, not collapse, a recalibration driven by the U.S.'s unsustainable debt load and changing fiscal dynamics. Corporate spending may slow and job growth in healthcare and education may taper. But investors who zoom out will find real opportunity in select sectors. Let's begin with Palantir Technologies, ticker symbol PLTR, a name that's been misunderstood, underestimated, and now undeniably dominant. Palantir is no longer just a government contractor. It's becoming the backbone of AI infrastructure across defense, healthcare, and commercial enterprise. Its artificial intelligence platform AIP isn't theoretical. It's producing real-world impact, cutting ER wait times by 38 minutes at Cleveland Clinic and slashing downtime by 40%. As of April 2, 2025, Palantir's stock closed at $87.45, with a market cap of $205.20 billion. In 2024, Palantir posted $2.87 billion in revenue, up 29% year over year, and adjusted free cash flow soared to $1.25 billion. More importantly, its U.S. commercial revenue exploded by 64%, and it's just getting started. Analysts now expect Palantir's earnings to grow at 50% annually over the next 3 years, with some calling it the NVIDIA of 2022. Next up is Tesla Inc., ticker symbol TSLA, a company that sparks debate like no other. If you can tune out the noise and zoom out the lens, the opportunity is staggering. Tesla is more than just electric vehicles. It's a full-blown AI and energy infrastructure play hiding in plain sight. Tesla's been under pressure lately, trading at $282.76 with a market cap of $909 billion, $500 million. But while headlines focus on chaos, the fundamentals tell a different story. In Q4 2024, Tesla delivered nearly 500,000 vehicles, posted record 11 gigawatt-hours of energy storage installs, and ramped up investment in AI infrastructure. The real breakthrough is Tesla's full self-driving version 12, accounting for the majority of miles driven on Tesla's autonomous platform. That's real-world data dominance that will power the launch of Robotaxi and the upcoming Cybercab in June. Finally, Salesforce Inc., ticker symbol CRM, a company that just gave investors a golden second chance. After a brief sell-off, Salesforce is trading at $271.54, with a market cap of $260.95 billion, and a P/E ratio of 26.52, a discount for long-term investors and one of the most underrated opportunities in enterprise tech today. Salesforce isn't just a CRM provider anymore. It's evolving into a dominant player in agentic AI and data-driven business automation. The company's Data Cloud and Agentforce platform are scaling fast, with Agentforce customers growing to over 3,000 within just 90 days of launch, and annualized recurring revenue hitting $900 million, up 120% year over year. In fiscal year 2025, adjusted operating cash flow soared 28% to $13.1 billion, with gross margins rising to 82%. Salesforce is now operating with 33% adjusted operating margins, up from just 16.7% a few years ago. If Rick Rieder is right and the future belongs to companies that leverage data effectively, these three tech stocks are perfectly positioned. They're not just riding the AI wave, they're building the infrastructure that will power the next decade of growth. This isn't about chasing hype. It's about positioning yourself in quality companies that will emerge stronger when the dust settles.